Well, if you see in the last 3 months, the gold prices are up by nearly 2%. And generally during such scenarios, gold loan financiers tend to gain because the value of the collateral increase. But this time, if you see the share price of Muthoot Finance and Manappuram Finance have actually declined by nearly 17% and 34%. So let's try and understand what are the reasons that are working against both these companies. So firstly, if you see, is the pressure on the yields. Now, both the companies have been consistently seeing a pressure on the yields in the last 3 quarters. And this is largely because of the intense competition that these companies, that is Manappuram and Muthoot, are facing from other NBFCs, banks and the unorganized sector. Now, along with this, if you see the AUM growth of both these companies have been subdued and this is again largely due to competition. Now, for Muthoot, if you see, the AUM growth has been much lower than expected, and this is the reason why the company has actually lowered their guidance for FY22. That is, the AUM guidance have been lowered to around 10% from 15% earlier. Now, in case of Manappuram, if you see, in the first quarter there was a decline of nearly 13.6%, and in the second quarter and the third quarter there was a gain of around 13.3% and 9.6%. So net there was in the last 3 quarters the gain has been close to 9%, which is not bad, but this has come at a cost, and this cost is the main reason why Manappuram has actually fallen more than Muthoot. Now, the company has not been able to find a right balance between growth and the margins. Their operational cost has been high, and this growth has come at the cost of the margins. Now, the company's marketing spend has been a lot more in the second quarter and the third quarter, which actually helped the company to grow their AUM. As you can see, the AUM has grown in the second quarter and the third quarter, but the net profit growth has been much lower than what it was expected. And if you see in the second quarter and the third quarter, the net profit has declined by nearly 15% and 29% compared to last year. Now, along with this, if you see, the high exposure to non-gold lending is also one of the concerns when it comes to Manappuram. Now, their 33% of AUM is exposed to non-gold lending, and 9% of Muthoot Finance is only exposed to non-gold lending. Now, in case of Manappuram, if you see, the GNPAs for non-gold lending has been increasing. For housing, it has doubled from 6% to 12%. For vehicle, it has increased from 2.7 to 5.6, and for MFI, there has been a slight increase from around 2.6 to 2.8%. Now, going forward, if you see for both these companies, though management sounds optimistic on the gold loan growth, the brokerages still expect a subdued gold loan growth going forward. On the P&L front, however, the brokerages are expecting the yields and the cost to remain stable for both these companies, that is Manappuram and Muthoot. And given this correction that we have seen in the share prices of both these companies, the valuations are much reasonable, and this is the only reason why most of the brokerages continue to have a buy rating on both these stocks. Nearly 75% of these brokerages that cover Muthoot and Manappuram continue to have a buy rating on both these stocks on the back of the reasonable valuations.